When we talk about wealth, most people immediately think about accumulation, money, assets, status, but the real story begins much earlier in the architecture of the mind. Before wealth manifests in numbers, it exists as an idea, a framework of belief, curiosity, and conviction. Every breakthrough investor, every visionary entrepreneur, every transformative builder began not with capital, but with a mindset that saw possibility where others saw limitation. Wealth creation is, at its core, a mental exercise long before it's a financial one. The mind interprets risk, defines value, and filters opportunity. If you train it to think in scarcity, it will protect, hoard, and fear. But if you train it to think in abundance, it will explore, innovate, and build. This is why mindset isn't just motivation, it's the foundation of strategy. The difference between the person who multiplies value and the one who merely protects it often lies in how they perceive uncertainty. In times of volatility, one sees threat, the other sees evolution. And those who understand that innovation tends to emerge from periods of chaos are often the ones positioned to capture exponential growth when stability returns. The data supports this. History shows that transformative wealth is created in moments of transition, when technology, policy, or culture shifts faster than collective perception can adjust. But only minds trained to think long-term, to see through the noise, can recognize these inflection points. The short-term thinker views downturns as endings. The wealth-oriented thinker views them as entries. One reacts emotionally, the other acts rationally, and over time, that difference compounds. Wealth compounds not just in numbers, but in perspective. It's fascinating how many people underestimate the role of imagination in wealth creation. The most powerful asset you have is the ability to visualize what doesn't yet exist and to make decisions as if it already does. That's how every disruptive innovation begins, with someone who believes that a new future is not only possible but inevitable. Belief, when paired with evidence and insight, becomes strategy. When you shift your mental model from consuming to creating, from preserving to multiplying, you begin to engage the world differently. You start asking better questions. What can be automated? What can be democratized? What can be scaled? Those questions build frameworks that create wealth not just for individuals, but for entire systems. But this mindset doesn't come from blind optimism. It comes from disciplined conviction. An understanding that markets, like innovation, move in cycles, and those who are emotionally prepared to think independently tend to outperform over time. Wealth requires patience in a world addicted to immediacy. It requires confidence in data when sentiment turns fearful. It requires an unwavering belief in compounding, of knowledge, of capital, of trust. When you focus your mind on learning, connecting dots, and forecasting the direction of progress, you stop reacting to the present and start preparing for the inevitable. It's equally important to understand that wealth in the mind also includes emotional intelligence. The ability to detach from short-term fluctuations, to resist crowd psychology, and to stay aligned with long-term conviction is a mental discipline that few master. Yet it's this composure that differentiates those who simply participate from those who lead. The wealth-oriented mindset views losses as tuition, volatility as opportunity, and patience as leverage. The mental model is not if it works, but when it works. That shift transforms fear into focus. In many ways, the wealthiest individuals are not those who own the most, but those who understand the most about themselves, about the systems they operate in, about the direction in which innovation is moving. Knowledge becomes the currency, curiosity becomes the engine. Once your mind starts thinking exponentially about technology, markets, and human potential, you begin to align with the forces that actually drive growth. You start building wealth not just financially, but intellectually and socially, and that kind of wealth, once developed, is almost impossible to lose. Wealth truly begins in the mind. It is cultivated through curiosity, protected by patience, and expanded by conviction. The more you invest in training your perspective to see beyond the present, the more your decisions begin to mirror that future. When your thinking compounds faster than your capital, it's only a matter of time before your reality catches up. The most significant shift in how wealth is created today lies in moving from measuring effort to measuring impact. For decades, the world rewarded time: how many hours one worked, how consistently one showed up, how visibly one labored. But the new economy doesn't reward presence, it rewards productivity, innovation, and scale. Value creation has eclipsed time spent as the true currency of wealth. The people and companies driving the next wave of economic transformation understand this deeply. It's not about how long you work, it's about what you create that continues to work even when you're not. The digital era has made this shift inevitable. Technology doesn't charge by the hour. Software, artificial intelligence, and automation are erasing the linear relationship between time and output. One well-designed algorithm, one line of code, or one breakthrough product can generate millions in value with minimal marginal cost. That's exponential leverage, creating systems that multiply themselves. When you focus on creating value instead of clocking time, you begin to operate on an exponential curve rather than a linear one. And that's where true wealth accelerates. The traditional mindset says, if I work more, I'll earn more. The wealth-oriented mindset asks, if I build smarter, I'll scale faster. It's a paradigm rooted in ownership rather than employment, in innovation rather than repetition. You can work 40 hours a week and still not create enduring value. But one idea, one patent, one product that solves a widespread problem can change the trajectory of entire industries. The question is not, how much time did it take, but how much transformation did it create? The distinction becomes clearer when you look at how the most impactful innovators operate. They don't measure their days in hours but in breakthroughs. They understand that time is a fixed resource, but value creation is infinite when paired with creativity and technology. The best use of time, then, is not to extend it but to amplify its results. Each decision, each experiment, each iteration compounds. That's the essence of exponential thinking, leveraging the power of ideas, systems, and networks to produce outcomes that outlive effort. Human capital, the ability to imagine, design, and execute, has become the world's scarcest resource, and in that context, the focus shifts from laboring harder to thinking bolder. It's not about being busy, it's about being effective. The hours you spend matter less than the insights you generate and the systems you create. The modern economy rewards leverage. Technology, capital, networks, and intellectual property are multipliers. They enable one person to do the work of 1,000, one company to redefine an entire sector, one vision to transform global behavior. This mindset demands discipline. It's easier to measure hours than to measure impact. But the future belongs to those who can quantify value differently, to those who can link knowledge to output, creativity to scalability, and purpose to profitability. A product that saves people time, a service that democratizes access, or a platform that connects millions. These are forms of value that compound faster than any wage ever could. When you build something that continues to produce after your direct involvement ends, you've crossed from trading time to building wealth. That's what separates the innovators from the imitators. It's why a creator who spends 2 years building a scalable platform can create more value than someone who works 20 years in a traditional role. Time spent is a measure of effort. Value created is a measure of vision. And the market rewards vision with disproportionate returns. As technology accelerates, this gap will only widen. Artificial intelligence, automation, and decentralization will continue to eliminate the premium on time and elevate the premium on creativity. Those who can think independently, innovate rapidly, and build efficiently will not just participate. They'll lead. The economy is rewarding those who create compounding systems rather than linear labor. Wealth no longer accumulates in hours, it accumulates in ideas that scale. Ultimately, every investor, every founder, every builder must ask, Am I measuring my worth in effort or in impact? The moment you shift your focus from time to value, you step into a different game, a game where the rules of wealth creation bend toward innovation, leverage, and exponential growth. In this world, time is no longer the limit, it's the seed. What you grow from it, that's what determines your real wealth. Every individual, whether aware of it or not, carries within them a portfolio of assets that are invisible to the market but invaluable to their future. These are not recorded on balance sheets, yet they determine who creates wealth, who adapts, and who leads. Skills, knowledge, resilience, creativity, relationships, and the capacity to think independently. These are the unseen assets that define the true potential of a person in an economy increasingly driven by innovation and intellectual capital. The tragedy is that most people underestimate these resources because they can't be quantified easily. But the most transformative forms of wealth are rarely visible until they are leveraged. The traditional definition of assets, cash, property, equity, belongs to a world where ownership was physical. But the new frontier of wealth is digital, intellectual, and emotional. Your ability to synthesize information, to learn rapidly, to adapt to change. These are assets that compound far faster than any traditional investment. In an economy where technologies evolve every quarter and entire industries can be disrupted overnight, adaptability is capital. Curiosity is capital. Conviction is capital. The more you invest in expanding these inner assets, the more prepared you are to capture value when the next wave of innovation emerges. The challenge is perspective. Because these assets are intangible, they are often dismissed as secondary, but when you look closely at the builders of the modern economy, a pattern emerges. They recognize the value of what others overlook. The entrepreneur who turned a personal struggle into a product, the engineer who connected two unrelated fields to build something new, the investor who saw opportunity in volatility. They all used invisible assets before visible ones. Their first advantage wasn't capital, it was insight. They turned what they knew, who they were, and how they thought into leverage. Consider how this applies to human capital. A person with deep curiosity can enter a field they know nothing about and master it within years because their mindset compounds. A professional who builds strong relationships earns access to networks that money cannot buy. An individual with emotional discipline can navigate market cycles, crises, and uncertainty without losing clarity. These are not coincidences, they are outcomes of invisible wealth being activated. When you start viewing your experience, mindset, and resilience as financial assets capable of generating return, you begin to see yourself differently. The most underestimated of all unseen assets is time invested in learning. Knowledge compounds faster than capital because it expands optionality. The more you know, the more doors open, new opportunities, collaborations, and insights that others miss. This is why the most successful builders are perpetual students. They understand that information asymmetry, knowing what others don't yet see, is the foundation of every exponential opportunity. In that sense, your capacity to learn and unlearn becomes your most liquid form of wealth. Another overlooked asset is your network, the trust, reputation, and goodwill you've accumulated. In a connected economy, relationships act as accelerators of opportunity. Access, collaboration, and credibility multiply your reach far beyond what you can achieve alone. A single conversation, a shared idea, or a moment of genuine connection can unlock opportunities that reshape your trajectory. That's why social capital is not secondary to financial capital, it's often the precursor to it. Your experiences, even the difficult ones, are also assets. Every setback carries data about timing, decision making, and resilience. The ability to extract lessons from pain, to stay objective in adversity, is a form of intellectual compounding. People who treat challenges as training rather than punishment build an inner infrastructure that can withstand volatility. Markets reward that mindset because in a world of uncertainty, the most valuable asset is the ability to stay steady when others panic. When you recognize your unseen assets, your perception of risk changes. You stop thinking in terms of loss and start thinking in terms of leverage. You realize that capital can be rebuilt, opportunities can reappear, but your internal infrastructure, your discipline, curiosity, creativity, can generate infinite returns. Wealth begins to feel less like something to acquire and more like something to activate. Most people underestimate how much they already have because they measure themselves against external indicators. But the real question isn't what do I own? It's what can I build with what I already possess? Once you understand that, you stop waiting for opportunity and start creating it. Your unseen assets become your first investors, compounding silently until the world catches up to what you already knew was possible. There comes a point when wealth ceases to be about accumulation and begins to be about contribution. Beyond money lies the kind of wealth that endures, wealth measured not by how much one owns, but by how much one creates, uplifts, and leaves behind. Purpose, giving, and legacy form the trinity of lasting wealth. They represent a deeper understanding that the ultimate return on investment isn't in assets, but in impact. True wealth is not static, it's generative. It multiplies when shared, strengthens when aligned with purpose, and transcends when carried forward through legacy. The pursuit of financial success is often the first stage of the journey, but it is never the destination. Money provides freedom, but purpose gives direction. Many of the world's most transformative innovators didn't set out simply to make money. They set out to solve a problem, to push the boundaries of what was possible, to improve how people live and work. The financial rewards followed because their creations held real value for others. Purpose, in that sense, is not a moral accessory. It's a strategic advantage. When your ambition is anchored in meaning, resilience follows naturally. You can endure cycles, volatility, and setbacks because your motivation extends beyond yourself. Giving amplifies that same dynamic. The act of giving, of investing resources, knowledge, or time into others, creates an ecosystem of growth that feeds back into its source. Economically and psychologically, generosity compounds. Studies consistently show that those who give experience higher satisfaction, stronger relationships, and greater creativity. The logic is simple. When you contribute to systems beyond your own benefit, you expand the field in which your own wealth can grow. Every breakthrough in history, from education to technology to social progress, emerged because someone decided to give back before they had to. Legacy, meanwhile, transforms the concept of wealth into continuity. It's not about how long money lasts, but how long ideas last. Financial capital can evaporate. Intellectual and moral capital can shape generations. Legacy is built when vision outlives its creator, when an individual's principles, innovations, or institutions continue to generate value long after they're gone. The most powerful legacies are not accidental, they are intentionally designed. They emerge when people align their success with systems that can sustain impact at scale. The key is to redefine the metrics of wealth. If financial statements measure returns, legacy measures relevance. If portfolios show ownership, purpose shows direction. When these dimensions integrate, a new form of prosperity emerges, one that cannot be disrupted by markets or time. A company built around purpose outlasts competition because it inspires loyalty and trust. An investor driven by contribution sees opportunities others overlook because they're not constrained by short-term returns. A life guided by giving leaves an imprint that compounds quietly in the lives of others. In the exponential economy, where innovation compounds faster than ever, wealth creation and purpose are converging. The next generation of builders and investors understand that their impact must scale ethically, sustainably, and inclusively. They are designing models where success is measured not just in profit margins, but in the problems solved, the people empowered, and the knowledge shared. That alignment between capital and conscience doesn't limit prosperity, it accelerates it. Because when value creation serves a broader mission, it taps into a deeper source of energy, the human instinct to build something meaningful. Every act of giving, every decision rooted in purpose, every effort toward legacy shifts the definition of wealth from personal to collective. You begin to see that money is not the goal but the instrument, one tool among many to express your values, extend your reach, and create permanence in a transient world. In that shift, wealth transforms from something you hold to something you build, something that grows not by possession, but by participation. The ultimate form of wealth is the capacity to change lives, your own and others. When you give from a place of purpose, when you align success with significance, you ensure that your legacy isn't just remembered, it's continued. That is wealth that compounds beyond a lifetime, the kind that no market can price and no time can erode.